My name is Andrew Stotts from the Valuation Masterclass Bootcamp, and right now we're going to have one of the presentations from one of our bootcamp students. The Valuation Masterclass Bootcamp is a 6-week intense course on valuation, and the capstone project is a valuation project and report. And that's what you're going to see, the final presentation of one of our students. So let me invite her in right now. Kautar, how are you?
I'm fine, thank you, Andrew. How are you?
I am excellent. It's my favorite time because I get to see your work, and I'm excited to also have you share that with the world. So let me share your screen. One second.
Okay.
All right. And okay, so the audience now can see your screen and they see you in the little right-hand corner. I'm going to leave this in just a minute, and when I do, you just start, okay?
Yeah, just let me know when
Uh,
you leave because
I'm
I
going
won't
to
be able to
tell
see
you.
you.
I'm going to
Okay,
tell you right now. I'm going to leave in just a
okay.
second, and then you go ahead and start. I'm leaving now, and you can start now.
Hi, everyone, and thank you for coming. My name is Kauthar Rufai, and today I'm presenting the equity research for Sinopec Group. So, I initiate coverage in Sinopec with a buy recommendation based on a target price of 7 yuan, implying an upside of 22%. I derive target price from a discounted cash flow based valuation using a WACC of 7% and a terminal growth rate of 1%. The highlights, which I'll be explaining further down the presentation, are that I expect refined product sales to plummet as electric vehicles soar, imminent business model restructure to drop gross profits in the medium term, and despite market dynamics, earnings are expected to rise from 2026. The major risk that I identified is a failure to adapt to changing demand, which will make more sense as we go further down the presentation. So, Sinopec Group, also known as China Petroleum and Chemical Corporation, and is a Chinese state-owned company incorporated in 1998. Its primary revenue sources include the sale of crude oil and the sale of refined products, petroleum products, and petrochemicals, and it has over 31,000 stores in China. So here I have three interesting stories, and I believe you'd find them interesting as well. A rebound in size amidst tough market outlook. The first story I have here is refined product sales to plummet as electric vehicles soar. Now, their main revenue components rather are gasoline and diesel. And as you'd expect, a large amount of the revenue is dependent on the kind of cars that are being used in China. Well, as of 2022, 22 out of 100 new cars in China were electric vehicles. And there's an expectation that one third of cars in China by 2025 will be EVs. Sinopec is aware and is now planning for an expansion and diversification. But the drop in demand due to the rise in EVs is already reflected in Q3 2024 revenue down by 10%. Furthermore, the World Bank predicts that international crude oil price would actually fall in 2025 and 2026. Hence, I expect revenue of the company to fall by 5% and 3% in 2024 and 2025. The second story I have is imminent business model restructure to drop gross profits medium term. Now, Sinopec is aware of the changing demand for gasoline and diesel and has now included over 6,000 EV charging stations within its gas stations. However, China already now has 10 million EV charging stations, and this indicates that the company would face competition and lesser competitive advantage in this line of business. Sinopec also plans to modify its refineries to produce more petrochemicals as opposed to petroleum products such as gasoline and diesel. Hence, I expect gross profits to fall from 9% in 2023 to 8% in 2024 and 2025 as the company incurs more production expenses and begins to regain its balance. Now, my final story is that despite market dynamics, earnings are expected to rise from 2026. Now, Sinopec has achieved all forms of integration in its business. It explores and produces crude oil, refines, and also markets and sells. Therefore, it can adjust its production processes to suit market changes, just the way it plans to adjust its refineries. It also has 31,000 gas stations in China, in which it can continue to install EV charging units. It has also entered into strategic partnerships with automobile companies to drive demand to its EV stations. Furthermore, it has launched Sinopec Overseas Investment Holding, which is a company established for investing, building, and operating refineries abroad. Thus, I expect revenue to begin to rise by 10% from 2026 as the company begins to regain competitive advantage and achieve foreign expansion. Now we're at the industry analysis. For 2024 revenue as of Q3, Sinopec leads the global market, followed by PetroChina and then ExxonMobil and then Shell. The oil and gas industry supplies over 50% of the world's energy needs. It is valued to grow to $9 trillion by 2033. Now, Saudi Aramco is generally known as the market leader with a market capitalization of $1.8 trillion. And Asia is expected to lead consumption in the industry. Second point here is oil and gas industry faces risks of underfunding. Now, the current trajectory of investments into the sector is projected to be insufficient in coming years. Therefore, more investments are needed into the sector. Otherwise, the world may face energy shortages. Now, the last point is that oil and gas reliance to continue despite increasing demand for renewable energy. Now, it's forecasted that fossil fuels, such as oil and gas, will retain 56% of the market share by 2050, compared to just 15% for renewables. And this is due to the currently already existing infrastructure for oil and gas and the technicalities of renewable energy storage currently. Also, there are the pro-oil policies that we see and foresee into the future. And so we expect that oil and gas will continue to dominate in coming years. Now let's go into the numbers. So some things I just want to highlight here are that is something I want to highlight is that I have inculcated my stories into my models. So as we see here, pardon me, this is quarterly results for 2023 and 2024. And then we can see revenue fall by 10% year on year, indicating that the company is already beginning to face declining consumption for its products. We also see gross profit margin fall slightly by 3%. Of course, this is due to the rising quantity of electric vehicles as well as construction slowdowns, hindering demand for gasoline and diesel. These are consensus estimates. Now, these were not done by me, but just to give a wider context as to what global analysts are saying. So here we have 19 analysts give consensus estimates, and they estimate a target price of about 7 yuan with an upside of 10%. They also forecast a revenue growth of 12% in 2024 before falling. I don't believe that because the Q3 results for 2024 have already been released, and there's almost no way the company is going to achieve positive revenue growth for 2024. So I think I'm right. And it's okay not to agree with the consensus estimates, but I think I'm right. What do you think? Okay, moving on, we have the revenue breakdown. When I dug into their company data, it shows that gasoline and diesel account for 46% of revenue. And that's they own 29 refineries in China. 29. How many does the entire Nigeria have? Okay, another thing I noticed is that their revenue is driven mainly by price and really not by volume. So even in years where volume declines, it's the growth is more than offset by the growth in price. Even where volume increases, growth in price increases at a higher proportion. So generally they're price driven, and this is good, but it's also a risk that if prices crash very badly, the company will suffer greatly. Okay, we now have the FVMR. So this is just a special A-Stot's way of analyzing companies. Some things I just want to highlight here are that the company has a very high asset turnover, 153 period 12 months to now, which is high. Their price to book is also fair, 0.8. It's attractive. And another thing is that they have excessively low beta, which indicates that it's very non-volatile, it's low risk. And I think this comes from the fact that it's state-owned, so it's very well protected. And we also have another special A-Stot's way of analyzing the company. This is WCB. Now, the company Sinopec was benchmarked against 300 large energy companies worldwide. And, this is a rating on a scale of 1 to 10. So something I want to highlight here is poor profitability. So you can see that when Sinopec is compared to 300 large energy companies globally, they rank 8 out of 10 in terms of profitability, showing that the company is not very profitable compared to its competitors. Moving on to more numbers, here we have the profit or loss statement. Just to show that I'm on my A game and I did inculcate my stories into my forecast. We can see that revenue falls in 2024 and 2025 before it begins to rise, as I believe that that growth will begin to materialize from 2026, 2024, and 2025 are more for restructuring and just figuring it out. More numbers. Now we have the cash flow. So we can see the effect of me reducing forecasting that revenue would fall and that gross profits would fall. As I said in my stories, the effect is that net income would also fall 2024 and 2025 before it begins to rise. Same for capital expenditure. because in these 2 years, I don't expect them to begin to build more refineries. I expect them to begin to install EV charging stations and, just restructuring their business, restructuring their refineries. So lesser capex, and then capex grows from 2026. And yeah, so like I said, gross profit margins would fall from 9% in 2023 to 8% 2024 and 2025. Yeah, so free cash flow data. So I did forecast using the discounted cash flow method. So this is just to show the free cash flow of the firm. It has been negative from 2022 to 2023. I expect it to also be negative, but then I expect it to begin to normalize from 2025, because as we see in 2021, there was 100 billion here. So I expect it to begin to normalize rather into the future. So I did not value using relative valuation, but just to show that I did consider this method. So we have the PB to ROE method. So the price to book is fair, is 0.9, which is in tandem with China's average, and actually lower than the global average, which is good. But the ROE is lower than the global average by a long shot, and it has been for years now. And that's why the PB to ROE multiple is highest actually. So by this method, Sinopec is overvalued. And then we have the PE to growth. PE here, price equity, is very high, indicating that the company is considered expensive by this metric. Metric is higher than all the global averages here. The EPS growth are expected to be negative. Therefore, this multiple PE to growth is not applicable due to a negative denominator. Now I have the method that I did use, which is DCF. My market risk-free rate 3.5, market equity risk premium 7. My beta 0.8. The company is generally 0.2 to 0.4, but it's difficult to maintain that to infinity. Remember, we're forecasting to infinity. So I put a 0.8 beta, WACC of 6.8, and then I used the free cash flow method and got an equity value of 7.6, so approximately 8 yuan. And then to my sensitivity analysis here, I wanted to highlight the major discrepancy here. So if gross profit margins changed from base case 8.4%, pessimistic case to 6.4%, the valuation would be an automatic sell, because the share value would fall to 4.6, which is less than current price. Aside that, every other metric in the sensitivity analysis is okay and would generally lead to a buy recommendation. And to my risk, based on my stories, it's clear that I believe that they'll be able to get back on track by 2026 and adapt to changing demand. And if they do not do so, the company may suffer. And so that's my biggest risk. And then we have others, such as price fluctuations and unproductive exploration activities. And so everything I have explained now addresses my recommendation, which is a buy recommendation with a target price 7.6 yuan and an upside of 22%. Thank you, and I'm now open to any questions you may have.
Okay, great. One of the questions is, if you go up, you show a weighted average cost of capital and a cost of equity that's pretty low. Can you explain why? Like, is there any risk that you're too low in your cost of equity, or is that driven by, low cost of equity in the Chinese market?
Yeah, so generally the Chinese market's cost of equity is actually higher than that. It's actually lower rather. So my estimate is actually a bit higher by being prudent, forecasting to infinity. So in the Chinese market, it's a fair assumption.
Okay. And can you go to the revenue breakdown page?
Yeah. Have I passed it? 1 second. Yeah.
Okay. Where does the revenue from EVs fall in this breakdown?
Yeah. So as of 2023, they had not made as much adjustments to their business model. So it doesn't fall here. And for the future, I do expect that a lot of the revenue would still come from gasoline, diesel, but then EVs will begin to materialize. But as of 2023, these were still their major components for the revenue.
Okay.
Yeah.
What from Moman, he asks, what is your thoughts on the company's opportunities outside of China?
Yeah, so the company is beginning to seriously focus on foreign expansion. And I think, because of, the world is connected, they have 26 refineries and they're not getting their demand in China. They would definitely think of exporting and begin to also diversify. And they're taking steps. So, the world is interconnected and they need to spread their wings across other countries, to fulfill that revenue obligation. I think they can do that.
How many refineries? How many
29,
refineries? How
29,
many
29.
refineries does Nigeria have?
I'm not even sure it's up to five.
Yeah, yeah.
Yeah.
Okay, another question from Sahil. He said, "What are your perspectives on the future of fossil fuels? Would they manage to retain market share, or will renewables take a large part?"
Yeah, I think they would continue to maintain market share. So I stated it in the industry analysis that the reason why fossil fuels are predicted to retain 56% market share by 2050 is due to the vast existing infrastructure. There's a lot of refineries, there are a lot of there's a lot of infrastructure for that sector, and I mean they're not going anywhere. And then there's also the challenge of storage for renewable energy. So, given all that, I think that oil and gas will continue to be a major sector.
Okay, last question. Moment
Yeah.
asks, "Why do you think the market is undervaluing this company so much, and what's the main catalyst that would push the price towards your target?"
I think it's just an ability for them to begin to be futuristic in their thinking. This installing of these EVs like they are currently doing, and also foreign expansion, which they are planning to do. So I think when they expand to the um, foreign land, and when they begin to also diversify, I think that would work. And currently, I think over 95% of the revenue is from China alone. So I think they've not explored that foreign dominance enough. So when they begin to do that, I think they would really grow to meet up to that forecast.
So, how does it feel to graduate from the Valuation Masterclass Boot Camp?
It feels great, Andrew. I worked for this. I really worked. There were so many things that could have made me not graduate today. There were so many times I was so close to not meeting my deadlines, to not submitting my projects. So it feels great. It feels great to know that I was relentless. I put in my work, and I always remembered when you say that you never stop, you never quit, and you always achieve whatever you want to. And so I took a page from your book and just pushed, and I'm glad that I'm graduating.
Yeah, that's great. And
Yeah.
what would you describe as your transformation over those 6 weeks?
I think I would have 3 points here. So I had prior experience with valuation, but nothing compared to this. But before, what I thought valuation was okay, when you're doing your model, just make sure the numbers are flat and they're just on a linear trend. Nothing is looking out of proportion. But now I understand that it's okay if your numbers are flying if you have strong stories to back it up. So I think that's really a transformation for me because, as you can see from my presentation, I have strong opinions about the company and the company's performance into the future. And that's not something I would have been able to do before. Another transformation point is how less time, how more efficient I am with research. So in my first week, I think I spent about 10 hours researching and coming up with nothing. Just going deeper into the data, coming out with nothing. But now in 2 hours, I'm able to filter through so much data and just get out. I can easily identify, what's important, what's relevant, and I'm much faster with my research, and that's transformative for me. And the third one is just, what you always say to us that you're an analyst, you're not a news reporter. You have to have your own strong opinions. You have to have your own views about what the country is going to do, even if it conflicts with consensus. So I think that's for me, that's transformation, and I feel it and I know it that I have transformed. I'm so grateful.
Yeah, that's awesome, and you have transformed for sure. One last question: tell us about how you heard about this, and then why you decided to join.
Okay, so I'm pretty active on LinkedIn. So I was just scrolling through one day and I saw someone who had just graduated from the boot camp. And I said, wow, this looks like such a great opportunity. How do you get in? And she said, okay, that you were going to post about it. And the morning that you posted, she actually texted me saying, Andrew has posted, make sure you go there. And then that was how, I started the application process. And I joined because I really, really wanted to learn valuation. I think it's going to help me for my career. I know it's going to help me for my career and my career prospects. So I joined to learn valuation and financial modeling. Yeah.
And what is your view on your career? What is your plans? What are your goals? Did the valuation masterclass change any of that or reinforce it or?
Yeah, you actually did, because I wasn't sure if I liked the numbers or I just liked the idea of knowing how to value models. But from the valuation masterclass, I now see that I actually enjoy it. So I know that I like financial analysis, and so that reaffirms that finance is where I want to be. So
Fantastic.
as for exactly what I want to do, not so certain, but it's definitely something that requires financial analysis.
Great. Well, you should be very proud of your accomplishment. I'm proud and I'm impressed of your work, and you represented the valuation masterclass very well. So I appreciate that. So I'm
Thank
going to
you.
take you out of this, and then we'll see you on Slack, and of course, cheering on your other friends who are coming up. So, all right.
All right. Thank you.
Well done. Well done.
Thank you.
Well, that was a great presentation. As you saw, some of her transformation she talked about that she had in the valuation masterclass was starting to understand that we're not newspaper reporters. We're not reporters. What we are is analysts, and financial analysts have opinions, and we support our opinions with evidence. And hopefully we're right. And if we are, we can be recommending a stock or something that ends up making our clients money. So if you want to build a competitive advantage in company valuation, join us at valuationmasterclass.com. I'll see you there.